As I mentioned in the past, there are 5 components of building a technical system. I have listed them down on the screen in front of you. We can see that the first component is trend, the second is momentum, third is pivot points, fourth is volume and volatility, and finally price action. That is, in order to take up a trade, a trader is usually asking themselves several questions, and if they follow this particular order, it is my belief that more generally or more likely they will be in the right direction. So trend, of course, when we look at this particular security and we look at the recent price action, we will see that it has repeatedly created higher lows, with the exception of this phase here where it created a double bottom. So the prior move to this double bottom, and we know that when securities create double bottoms, they get into a range. So the move prior to this trend was that of an up move. Currently, the same security, that is Nifty, is forming a double top. In other words, a security which forms a double top and a double bottom is ranging, but the prior move is up. And as I mentioned in the previous videos, that whenever a trending security is ranging, we will bet that the breakout will happen in the preceding direction. So the preceding direction is up. It is currently ranging. So as per theory, we are going to bet that the breakout is going to happen on the upside, that is in the preceding direction, and something similar here. That would be the general expectation based on price action, pattern theory, and so on and so forth. Today we can see that the market is obviously forming a double bottom. It is at a historic high level. It's testing that. So it's a critical point, no doubt. And it has come there precisely a day before state elections. And also, geopolitically speaking, there is a possibility of hostilities with Pakistan. That is also something that is developing. This is in the wake of the Delhi events where the government has announced or clarified that this was a terrorist attack, and we know that the position of the government is very clear. A terrorist act is as good as an act of war if it is funded by or sponsored or planned by foreign agents or foreign countries. But besides that, we will see that on the eve of a critical event, the market is at a double top, and we can also see that this is a simple saucer pattern and it is potentially looking to break it out. And if it does so, it has a 4,000-5,000 point upside target, which we have discussed in the past. So it does have all of these glorious targets, but for when it comes to trading, it is very specifically of what is going to happen tomorrow for us in the short term, because we would be taking positions, particularly since I've advocated positional and swing trading. So most likely we will be taking positions. Since the structure is upwards, the positions would generally be on the long side, and we would have bought into some dips, and currently the security is at a higher top, which means that most likely we are looking at gains. And bang before the event, a critical event at a critical point in the market, the question is, should we just book the gains and close the position and go next day, or carry forward the position? Now, historically, I have seen that events can be very, very painful, but events are also the moment in which you can really, really shine. I mean, it's such a double-edged sword. It's such a double-edged thing. And the whole point of careful risk planning and careful trade planning at a unit trade basis is to get yourself into a position that just before a major event, you are taking up a stand in the market. So, for example, my stance in the market is I'm going to be long. And in the event the market obliges, it could be year changing. So this will impact the entire year's P&L. So that's what is most likely going to happen. So needless to say, there is this excitement, nervousness, anxiety as you go in, but that's very normal, that's very natural, and we simply have to do our jobs. We have to put our stops and trail the position. And if those stops trigger, bad luck. So we'll see what happens tomorrow about that. But now let's, since we are right before a major event, the point being that in today's video, I want to talk about how do we plan for volatility. And if you see, obviously you'll have to see my videos in continuation. One of the key indicators that I use for volatility is what we call as average trading range, or ATR. Now we can see that Nifty has an ATR of 1283 points. So let's just call it 1300 points. So Nifty has a standard trading range of 1300 points in a month. And if I take the cursor on the current month of November, we will see that the high is approximately 26,000 and the low is approximately 25,300, which means out of an allotted 1300 points, which is the general average for Nifty to move in a month, So far, the market has covered 700 points from high to low. And now that it has covered 700 points, it looks like there's room for 700 points more in the month for the market to go, and that would be perfectly within its trading range. It will not even be a volatile month, it will be a standard month. That is, in the event the market actually trades 1300 points in this month. Currently it has already traded around 700 points, so which means if it trades 600 points for the month, it would be considered to be very standard. We know there are approximately 15 days or 10 to 12 trade sessions for the month. So so now the question is, can the market move 50 points on an average in order to move the remaining 600 points? So yes, it can. Or would it move 600 points on a single day and then just remain flat for the remaining period? Even that is possible. Since we are long, our entire planning is going to be on the downside. And from the current 25,800 levels, or from the current levels, I will simply look at the month's low 25,300 and just mark it, because this is coming at 600 points or 700 points below. So I'll mark this as one potential point. And of course, I'll take the full 1300 point low also. So which means that if from the high of 26,000 market was to correct full 1300 points, it would obviously go to 24,700. So I will mark the other low as 24,700. So sum and substance is that based on the monthly charts, when I'm planning for the downside, this is the downside that looks very normal as per the market's historic trading range. I have in my sessions taught 14 also, and I have taught 5 also. In case of 5, it is 1200 points. So those who are seeing it in 5 would see it as 1200 points. Those who are seeing it in 14, they will see it as 1300 points. It's 100 point here and there. These differences are going to come. Any which ways. So we have planned for the downside based on the monthly. Now let's plan for the downside based on the weekly. When we come on the weekly charts, we note that the market has a trading range of approximately 500 points in the week. And if we look at the current week, the high is 26,000, the low is 25,450. So it looks like for the week, the market has completed the trading range, right? Which means that any move beyond this will make the market more volatile. And tomorrow is the last trade session of the week also. Currently, the market is at 25,800 or 25,880. So all I will do is I'll subtract 500 points. That is, I'll assume that if the market has to go full week against me, or from the high of 26,000, I'll subtract 500 points to get to 25,500. In other words, if the market had to go full, tomorrow had to do a full week's move in a single day, if the market had to do that, then obviously it will reach 25,500 levels. And then finally we go to the daily, and in the daily we see that the trading range is 200 points. The market has closed at 25,800. The problem with the daily is that it can obviously gap down. That's one of the problems with the daily. So therefore I would ignore the candles that are getting the ATR that is getting formed on the daily for this event, for this particular purpose. And what we are seeing here now on the screen, which I will zoom, are logical points of exit from the market. Because once this would happen, we would know that this particular range has failed in its, would have failed on its entirety. Because the structure that the market would form on the daily would look something like this. This is obviously a top. This here is the bottom. This here is now another one. And finally this structure will be getting formed if it takes out one of these lows. And like we discussed in the previous videos, this is obviously not a very bullish structure. This is a clear M pattern. Though it's happening in a range, it's not very exciting to be a part of this. And this M pattern has a bigger target below. So earlier this M pattern was forming on the hourly, where we got a 25,300 target. Now this M pattern would be even bigger. So 25,950 or 26,000 on the top, 25,300 on the bottom, or 350 on the bottom. So it gives it a clear 24,700 point target, which is what we have already marked here. In other words, going in for tomorrow, there seems to be no real reason to hold on to the stocks, particularly if they are breaking 25,450. And certainly if they're taking out 25,300, which means at 25,300, whatever positions were created will most likely have to go. That has to be our plan. That has to be the clear plan for anyone who's taking long positions. And it can be easily calculated because all we have to do is check where was the previous week's low. So the previous week's low is typically around that, and a few maybe points or ATR, however you measure it, that is basically where an optimal SL actually can be placed. So this obviously is the planning for the downside, and because I'm long, my mind entirely gravitates towards what can go wrong tomorrow in the market, and consequently that is why I keep thinking about that. It will, however, be unfair to not make an estimate on the upside. So for the same 1200 points trading range, we can see that the market has actually for the month only moved 600 points, which means that from the current place, current high of 26,000, it has all the makings to take it out to 26,600, and that too would be perfectly within the trading range of the market. In other words, the market would have traded precisely 1 ATR. So 26,700 seems to be like the perfect upside target for the month, going into this particular month. So like I said, we are only planning, we are already carrying longs. A minor dip, most likely we would buy. A major dip till previous low, we would have to start booking out on losses. And a newer low that is something that we had calculated below 25,300. That's it. That's the end of the trade. We just take what we get and we leave. Now we are only discussing the upside potential just to keep our morale high. So we can see that there are 600 points on the upside that is possible. So 26,700 becomes like the most logical first target for Nifty for the month of November. This is simply the most logical one. If we go on the weekly, it's the same story. The market has actually moved its entire 500 points. So if the market were to move its entire 500 points again, because like we planned, so it's already moved the entire 500 points, but if it were to move again, so just like how we calculated on the downside, we will also factor it on the upside. So we will see that 26,000, so from current levels of say 25,900 or 800 or whatever, 26,400, 350 becomes the perfect weekly target for Nifty. And we will not worry about the daily because the market could simply gap up. So logically, if the market gaps up at 26,450, that's just a great place, or 350, it's a great place to take out some targets because we would be carrying longs from almost 25,300. We get 1,000-point move. Your targets would start coming. In other words, once the longs are built up, then the only action that is going to happen is that those longs are going to be closed. The only thing that the trader is planning is where. And the reason why we are focusing on ATR going into the event for tomorrow is because we want to plan what is the potential trading range of the market. So if you remember the general election result in June 24, the market moved about 1,000 points. Nifty moved about 1,000 points in that particular trading day. In other words, on that single day, Nifty gave the month move of an entire trading month. So logically, all traders will say that's a very volatile day. But could it be planned? The answer is yes. If we know the ATR of the stock for the month, we know that it is in the potential of the stock to give that return. And we know that eventually during the month, the market recovered. So the same thing is possible. We are doing the exact same thing, that from the current high, current low, we are simply subtracting ATRs, estimating how much move is still left, and we are setting up a trading range in order to prepare our trading behavior. So sum and substance is that a break of 25,300 gives market a 24,700 point target, and therefore it will form a bigger M pattern, and we'll therefore leave it. Even if it reaches 24,700, even if Nifty reaches 24,700, which is this dark line here, which I will just mark it, I think, in red, our trend assessment will still be bullish. So the trend assessment will still be long, but we will not have long positions at that time in the market. The market will be highly oversold, and we will have to rethink our plan of what to do in the market, because this would still be a bullish structure. So that's therefore there is no reason to hold on till below 25,300 in any circumstance. Currently, market is trading about 500 to 600 points higher than that, and it's anything is possible. So we just prepare for the worst. But then yes, the upside is also there. It's equally possible that the market would give a 500 point up move, and we know what we are going to do there as well. So yes, we are again not going to predict whether the market is going to move up or move down. On a volatile day, we see gaps here. Gaps always can get filled. We could even, another argument here could be that this here is a breakaway gap. this is a breakaway gap after 3 days, after several days of fall back into the range. And a breakaway gap on a pull, on a throwback, on a rally that is sending it up, is actually very bullish for the market on principle. But of course, as I'm recording this video, I can see that S&P is like 1% down, or something is down here and there, and that's also part of it, which but if I were to just look at this structure and look at it without any bias, I would think that this thing is going to really break out and explode. It has all the makings. Whether it would do it in this expiry or no is something that remains to be seen, and whether the event would be taken favorably or no would be seen tomorrow. So it's going to be an intense day, and I wish you all the best, and obviously a lot of courage in order to hold on to the positions. And these make or break days happen, and it is my view that this is the part of the process of becoming a trader, that no matter what you have done in the past, there is always an event, there is always something that is happening in which the opportunity exists to do much better. So with that, I hope you all the best, and thank you for your time.